Investors, after a whole second year worth of dividend investing, I'm here to share with you not only my dividend income from the month of December, where I received 12 dividend paychecks, but disclose my entire 2022 dividend income total, where I had exponential growth from just a year prior in 2021. Now, if you are brand new to the channel, my name is Ari, your value and dividend investor here on YouTube, talking just about, well, value and dividend stock opportunities for you, along with economic insights and my personal journey, so you can literally see the power of dividend investing. We have a lot to break down in today's video in terms of dividend income, so let's get right. Actually, you know what? Tap on that thumbs up button to help me grow this channel and get the word out there. If you haven't done so already, subscribe to the channel. Now, with that being said, let's get right to it. So here we are, investors. 2023 is underway. My account's sitting at $100,762.80. And after one heck of a 2022, I am thrilled to share that I only foresee my dividend income doubling this year, not only month over month, but year over year. So I want to go ahead and break down my December dividend income with you because it was a killer month, and wrap us up with the annual total. Now, usually with videos like these, you get an investor on YouTube mentioning the company that paid them a dividend and then how much they were paid. But that's useless for you and not so much fun for me. So with each dividend paycheck, I'll talk about the company itself, whether it may be a solid buy right now, and then how much I was personally paid based on the amount of shares that I hold. Now, with that being said, let's rewind all the way back to December 6th, where we had our first dividend paycheck come in from Southern Company, ticker symbol SO, which is the second largest gas and electric utility company within the United States in terms of a customer base. And not only that, but it's the second largest employer within America according to a recent Forbes 2022 ranking. Now, ultimately, we're talking about a $78.94 billion market capitalized industry leader. Now, am I throwing money into it at this point in time? No, it's actually up on the year by over 10% with a PE ratio at 22.8, which makes sense given the level of safety it provides investors. However, a solid investment that I have been holding as a shareholder of 10 total shares, Southern Company paid me a dividend, $6.90, given their dividend yield is coming in at 3.75%. Next up, one of my prized dividend stocks, the one, the only healthcare gold find, Johnson & Johnson, ticker symbol J&J, paid me out in the 6th as well. Of course, I'm safely assuming you'll know of Johnson & Johnson, given their 130 plus year history that revolutionized not one, not two, but three segments within the world of healthcare, from pharmaceuticals to medical devices and plain old consumer goods. At the end of the day, this is a healthcare investment that is bound to only continue to dominate their industry, with a current market capitalization above $470 billion. And with investors flocking to safety during our uncertain times, we should not be too surprised to see J&J also up on the year by over 7%. However, because of an ambitious goal to get Johnson & Johnson to 100 plus shares in my portfolio, I'm patiently waiting for Johnson & Johnson's share price to fall, as well as that PE ratio to come down below 25.1, which is currently sitting at. Perhaps I would begin to then dollar cost average into the position again around $165 to $170, especially with analysts remaining very optimistic about J&J's future, coming to a share price of $184.29, which no wonder why we see hedge funds increasing their position with J&J. As for me at this time, I own 59 total shares, so I received $66.98, given their dividend coming in at 2.5%. Coming up on the 15th of the month, the big payday of December, with 4 dividend paychecks, the first of which was from Stag Industrial, ticker symbol STAG. Now, this is a monthly dividend paying REIT that was founded rather recently in 2010 with a focus on industrial properties and a special emphasis on warehouses, which is key given we are heading into what I think will be a more e-commerce centric future. And when it comes to Stag, one of their largest clients, aside from plenty of logistics companies, is none other than Amazon. But more impressively here is their vast portfolio of properties with 563 buildings in over 41 states, all allowing for their market capitalization to have grown to over $6.2 billion. And with that stock share price having slid over 22% over the course of the year, it is making for a nice opportunity in my opinion, especially as we see analysts predicting over 15% worth of upside, coming up to a share price of $39 per share. Now, I personally was dollar cost averaging for a bit and hold 29 shares, to which I received $3.60, given their dividend yield is coming in at 4.51%. As for this next dividend stock, it's also a REIT, but this one is my REIT of choice, and I would strongly recommend looking into it for a solid real estate investment. It's Realty Income, ticker symbol O, coming in with over 11,700 properties across the United States, into Puerto Rico, the United Kingdom, and Spain. And if you're looking for even more safety, let it be their diversification with over 1,100 clients. Now, Realty Income has done an outstanding job in terms of growth, and it just continues to grow, which is why I am constantly watching it and would like it back below $60 before buying more shares. But I will share that this $40.52 billion market capitalized REIT has gotten a ton of attention from hedge funds recently doubling down on it, to analysts who remain optimistic about Realty Income's future, coming up to a share price of $68.57 per share. That's just about 6% worth of growth. And as for my dividend paycheck from Realty Income, it came in at $25.64 for holding 103 total shares, with that dividend yield of theirs coming in at 4.65%. Moving right along to our next dividend paycheck, it came in from the world's most beloved soft drink manufacturer, Coca-Cola, ticker symbol KO, which investors, if you are really looking for safety, I mean, voila, here you are with over 135 plus years worth of this iconic company operating in over 200 countries with 200 brands worldwide, yet with their original cola doing the trick since its inception. Now, Coca-Cola is not necessarily cheap right now, with that share price at around $63 per share and a PE ratio at 27.6, but there certainly was a decent amount of hedge fund activity buying into Coca-Cola for recession proofing. As for me, I wouldn't buy more shares unless we saw some of those March of 2020 prices, but I will continue to hold my 18 shares, which allowed me to receive $8.33, given their dividend yield coming in at 2.79%. Next up, in the last of the paychecks to come in on the 15th, we had a paycheck come in from my good friend Ronald over at McDonald's, ticker symbol MCD, which is of course a dominant fast food chain out there with over 38,000 locations around the world, providing investors with plenty of safety. And during times like we're in now, where consumers are stretched thin monetarily, yet still want to continue to dine out or on the go, here we are with McDonald's up on the year and trading for a bit of a premium with their PE ratio above 33, yet there is still some upside predicted by analysts, about 8.46% worth of it, but I'm not exactly a buyer, definitely not at these share prices, even though we see smart money doubling down on McDonald's rather recently. I will, however, continue to put that McDonald's smile on for that dividend of theirs, to which I was paid $4.66, given their dividend yield is coming in at 2.14%. Now, just 5 days later, on the 20th of the month, a rather new holding in my portfolio, Stanley Black & Decker, ticker symbol SWK, shelled out a nice dividend paycheck my way. And when it comes to Stanley Black, I think this is a standout opportunity as we speak, so let's chat. As of right now, Stanley Black is down nearly 57% on the year, trading for only $78 per share. Investors, this is the tool supplier to Lowe's and Home Depot, with their top-notch tool brands like Craftsman to Paladin, Stanley to DeWalt. And who are we kidding? This is a $12 billion market capitalized global tool manufacturing leader with smart money buying in for the long term for what I think will certainly deliver through on returns. So with that PE ratio at a low of 8.4, I bought shares and currently hold 20 shares worth of Stanley Black to receive $16.08, thanks to their dividend yield coming in at 4.17%. Now finally, we had two stocks pay me out on the 30th. The first of which was Bank of America, ticker symbol BAC, which is the second largest bank in the United States according to their assets, with interest rates only likely to continue to rise. I do foresee Bank of America, along with its competitors, performing very well, making a comeback from this decline of over 25% on the year, as it's currently trading for around $34 per share, which to me just screams like a massive opportunity with that PE ratio coming in at 10.6. Not to mention plenty of bullish sentiment around Bank of America, coming up to a share price of around $40.50. That's over 18% worth of upside. And if you're looking for more confidence, how about smart money buying in right now as well? And while I have not bought more shares of Bank of America in a while with a focus elsewhere, I am certainly enjoying the dividends from Bank of America after receiving a paycheck for $7.72, given their dividend yield is coming in at 2.57%. Now, last but not least, in terms of individual stocks, Lockheed Martin, ticker symbol LMT, sent me a dividend paycheck. Now, I bought into Lockheed Martin quite some time ago after a nice return from a swing trade on Boeing, and there have been zero regrets since with this industry-leading defense contractor. I mean, when you're talking about safety stocks, there are no better options than companies that have long-term defense contracts with our very own United States government and governments around the world, delivering through on the latest defense technology. As for this $124.88 billion market capitalized investment, I'm here to say it's not exactly a strike price for me to buy in at $476 per share, and their PE ratio coming in over 20 at 21.9. But should we experience some volatility, I think it is worth an add to your watch list. After all, you would be joining dozens of hedge funds and investing into Lockheed. Now, when it comes to the dividend paycheck that I received, at $15.42 for holding just 5 shares, thanks to their dividend yield coming in at 2.39%. Now, the remaining 4 dividend paychecks came in from indexes and settlement funds, and for the sake of your time, I'll combine them all together. But first, share that the indexes were Vanguard's Total Stock Market Index Fund, ticker symbol VTI, and Vanguard's Total Stock Market Index Fund Admiral Shares, ticker symbol VTSAX, both of which have over 4,000 stocks within them and are essentially opportunities to capitalize on the entire market with an average dividend yield on a quarterly basis ranging from 1.2 to 2%. However, these indexes have growth stocks as well as value plays, which I feel are far better than investing into a dividend-specific fund. Either way, I received a total of $198.04 from all 4 dividend paychecks. Now, investors, are you ready for this December total? Because you better believe it was another record-breaking month, as I received a grand total of $353.37, which is just outstanding considering the fact that I did absolutely nothing. But before we actually go any further, I want to go to the dividend tracker to witness the real magic of dividend growth investing. Inputting December's total, we can see that the year-to-date total jumped to $1,666.43 for all of 2022, which essentially breaks down to $139.04 per month. Again, all for doing nada, nothing, zippo, and investors, we're about to double it again this year. So not only do I want to know now what you brought in during the month of December, but I also want to know your annual total for 2022. I also want you to go ahead and tap on that thumbs up button for me if you enjoyed this video and the dividend journey thus far. And if you haven't already subscribed just yet, not a problem. You can do so right now and invest with me in 2023 as we ambitiously double my dividend income for yet another beautiful year worth of passive income. Now, investors, until my next video, I will see you all there.